The market bounced today off of this 585 support level that we highlighted in last night's video. This is a major support resistance level that's been going on for the past month. Back in October, we were bumping up against the 585 level as a resistance point. As we broke that following the election, it's now sort of serving as a support. We'll see if that holds. So far today, we got the bounce we were expecting. You can see the largest GEX level here is at the 588 strike. That's basically where we closed today. So a lot of that is going to be rolling off as 0 DTE. And so we're going to come in tomorrow and see what the GEX picture looks like. So far, though, we are basically back into positive gamma exposure territory above the 0 gamma line, as you can see highlighted by the blue line on our graph. And so the key question for tomorrow is, will we be filling this gap here that is left over from Friday between 590 and around the 593 level? If we do fill that gap, I suspect the gamma exposure picture is going to shift dramatically higher. There's a lot of contention in the market at these levels, as this is somewhat of a pivotal zone. Of course, anytime you come off of a major support resistance area, of course you're going to have contention around that zone. So we're just coming off of this level here, and I think tomorrow is going to be a key day this week to determine if this rally from the election is going to resume or not. So definitely something you want to be watching at the market open tomorrow.
Thanks, Anthony. I wanted to go over the VIX again. Last week, we pointed out the VIX negative correlation and how once you string several of those instances together, it can be predictive of a VIX spike, and it actually happened faster than I thought it might. But Friday, we had that move that was really about 20% from Thursday's close. We went from 14 and change at the open and topped out at over 17 and a half. But now we find ourselves in an area where we have the VIX expiration coming up on Wednesday pre-market. VIX gamma shows that we still have this really huge negative gamma cluster at 15. And actually, this negative gamma extends all the way up to 18. So I kind of find myself in a position now where I'm not really certain where the market goes over the next couple of days. Really, what the chart is showing is that we could go back as low as 13 and a half and maintain at least a bullish picture for volatility based on the concept of the whole moving average marking a support level.
Thanks, Sean. Next, I just want to turn to the S&P 500. We were talking about the SPY earlier, and I want to just point out the difference in the gamma exposure structure between the SPY and the S&P 500. Much more bullish on the S&P 500 GEX chart. We've got large positive GEX concentrated at 6,000, 6,100, and really, even if we pull the chart down here, we can see we've even got large positive GEX at the 6,200 strike. Again, as we've been saying for the last several weeks, this is, as we believe, market participants coming in positioning for a year-end run-up into these levels. This is telling us that there are many market participants, and when we're looking at the S&P 500, we're talking about potentially a large amount of institutional traders positioning here in the options market at higher prices. So that is definitely something to watch, especially as we are starting to bounce off of key levels here. I'm keeping an eye out on volume at these higher strikes. Like if you look today at the 6,000 strike itself, on the graph, it doesn't look like it's very much, but it's over 44,000 contracts here traded at the 6,000 strike. And that is significantly higher than where we're trading here. It's nearly 100 points higher on the S&P 500. So large gamma exposure level at 6,000, significant volume coming in. If you're new to the channel, the blue bars are highlighting volume by strike for today specifically, and the purple bars in this section are gamma exposure. And so these two indicators can really give us a good picture for what is happening under the surface in the particular ticker that we're looking at. And I'm really surprised to see how positive this has remained through the softness over the last several days. And that is really bullish in my opinion. It doesn't guarantee a V-shaped bounce necessarily to new highs, but it may just take a little more consolidation at these levels before we see some momentum start to kick in. But that is our base case scenario that we are planning for when we're talking about market movements into year end.
Yeah, so Anthony, I'll talk about Meta, which had a brief spike down to this big negative gamma reading on Friday, which was OPEX, but then today bounced right back up. And what I can't get out of my mind is what I saw today, which is this big gamma cluster at 600 that still remains. And we're down in a dealer zone at the current level. And look at this option volume we saw today at 580 and at 600. And if we go to the chart, the chart actually looks to me like, okay, maybe it might have some more downside to that 540 area, and we are below the whole moving average. But it's such a strong picture on the gamma front as far as that big cluster at 600. It might take some time to get there, but I think there's pretty high odds that a month from now, we'll at least make some attempt back up toward that 600 area based on the current gamma picture.
Next, I want to turn to Netflix. Netflix nearing the 850 strike, which is the largest gamma exposure concentration. It's really had a really nice run up from the 750 upwards to the 850 range here just in the last couple of weeks. We could see some congestion at the 850 strike, maybe some consolidation or a pullback and retest of this lower dealer cluster zone. We've got volume that came in today at the 800 strike, but we also had pretty sizable volume at the 900 strike. And so I think this is a very interesting place on Netflix, kind of sandwiched between these two volume levels. You see this is obviously where the bulk of the volume has come in, but sandwiched between the 800 and 900 strike. In my opinion, if Netflix pulls back, into the 820 to 830 zone, somewhere kind of in this range here, that could be an interesting point from a risk reward standpoint to enter for a move back above that 850 level and potentially an attempt to get up to the 900 strike. I'm going to keep watching this 900 strike for a while and see how the gamma exposure grows at this level. But if we continue to see volume coming in at the 900 strike for the next several trading sessions, this level is most likely going to continue growing. And if momentum continues up towards that level, that's going to be a big, big magnet for Netflix.
All right, Anthony, on my list today is actually good old Apple, Tim Apple here. So we breached the middle Keltner channel intraday, but then actually closed below it. But what I still like technically here is that we are above the whole moving average. The chart looks neutral to me overall, so I would use this whole as sort of a stop loss for my trade. Below 225, I'm getting cautious, and below 224, I'm stepping aside personally, just based on my risk appetite. If we can get back above this 228 level, I mean, that opens the door all the way up to the top of the Keltner channel around 240. If we go over here and take a quick look at the gamma picture, very positive gamma, almost to an extreme, but there's a lot of big positive clusters here, anywhere from 230 up to 250. Gamma in total has been on a positive trajectory. It did top out here, but it's been on the ascent again after bottoming on, like a lot of things we looked at, OPEX Friday. So we're back to 323 million positive gamma. And looking at our gamma levels chart, we had volume at the 230 level, but just like we saw on the gamma data graph, we have gamma all the way from 235 up to 250, considerable amount there. And really, we're not even in that dealer cluster zone until we get to 235. So I think there might still be some meat on the bone for Apple at this price.
We're going to continue the conversation in our community Discord. If you haven't checked that out, I'll put a link in the description below. Come on in and say hi. We'd love to see you. Also, don't forget, you can access our gamma exposure dashboard and our option flow analytics by heading over to geeksoffinance.com. Members also get access to our Geek University course. This is a free 5-hour option strategy, volatility, gamma exposure, and our overall trading approach, free for all members. You definitely want to check that out when you get a chance. Link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.